Is buy-to-let dead? Now, it's interesting that people might think this. The truth of the matter is that you can build a property portfolio anytime, any year. Because one of the things that we always focus on, and one of the things that I want to stress when I'm talking to anyone, is that you make money when you buy. The biggest challenge is most people don't have the right investment criteria, so they're probably building a portfolio based on the wrong investment criteria and the wrong principles. Because it's not just going out there and buying any property. We want to make sure that we're making money when we buy and we have a healthy portfolio. You know, a common question I get all the time, and it drives me a little bit crazy, when people say, well, Paul, how big is your property portfolio? And that's irrelevant. It doesn't matter. I know many property investors out there who have 20, 30, 50 plus properties. And you might think that, wow, they've got a whole bunch of properties, they must be doing good. But the property portfolio generates no cash flow. It's not the best properties in the first place. They shouldn't have bought the majority of them. They've got so much money, their own personal money tied up into that portfolio. And that portfolio is stifling their business. It's an unhealthy portfolio. So it's not about the quantity, it's about the quality. I know on the flip side, especially many people who go through our programs who go out there and have only 10 properties, a fraction of the amount of properties that a lot of people with big portfolios have, yet it's healthy, generating a significant cash flow. And the best part, their working capital, their initial working capital, it keeps on recycling in and out of properties. And that's why they can continue to build a big property portfolio on one pot of cash. So what do I mean by this? So let's address the whole as buy-to-let dead in 2019. There's a few indicators that are getting thrown out there that are panicking people and making them think that is buy-to-let even a feasible strategy right now. There's multiple different strategies in this property game. That's a challenge because where do you start? But let's just focus on buy-to-let. We've got the taxation challenges just now. Now, one thing that I know is that you're not the only one that's affected. Everyone's affected. But the truth of the matter is you need to get the right specialist property tax advice. Wouldn't it make sense to go and seek the right advice to understand your personal circumstances and situation based on what you earn, based on your future strategies and what you want to go and do in terms of building wealth? And they'll be able to present to you the best options and how you can pay as little tax as possible. There's many strategies out there. That should not be a concern. Many people who worry about that, the ones who are worrying about the tax changes, even though I don't agree with them, it's the game now. So I can either bitch, complain and moan about it, or I can get with the game and just play it. I don't agree with it, but I'm playing the game. Those who are struggling and starting to really be concerned about the tax is those who never bought right in the first place. Those that never bought with cash flow in mind. Those that never bought with the right investment criteria. And we can't make those same mistakes. And this is why you'll have a healthy property portfolio if you have the right investment criteria, you buy right in the first place, and you don't tie up all of your money. Now, for me, my own point of view and what we teach at our Property Protege program is, let's say the typical acquisition cost to buy a property. What do you need? You need a deposit. You need the renovation costs. If you're going to add value by renovating the property, you need different legal costs, different professional fees, different taxes required. Let's say all of that there. I'm just making up numbers. Let's say all of that, the deposit, the refurb, all the professional fees, all the associated costs comes to £50,000. Now, a question to ask yourself is, do you have £50,000 available? If you do, then great. How many £50,000? Do you have 100,000, which means you can go and buy 2 properties in this same example. If you only have one £50,000 pot of cash, you can go out there and buy 1. If you don't have £50,000, we need to get creative. You know, my mindset in the early days is I'd rather have 50% of something than 100% of nothing. So would it be a position where you joint venture with someone who has the money, you find a deal and you partner up? Or some of the stuff that we teach is how you can get creatively structuring your deals. You're putting none of your own money in and you're leveraging other different lending, non-traditional lending methods. So there's different ways you can get started in property. But let's just pull it back into the one investment pot that you've got. So once you use that investment money, whether it's your money, a private investor's money, whoever's money it is, once you put that into the property, this is how you know that you've done something right and you've got a healthy property portfolio. When you buy that property, you're going to add value for the renovation. And then what you're going to do is you're going to refinance And if you do this right, you'll pull all of your working capital back out. So that £50,000 will come back out. So what does this mean? Let's say you buy a property that's worth £100,000 and you buy that for 70. So you buy that at £70,000 and let's say you spend, £20,000 in a renovation. And that £100,000 property, because you spent £20,000 in renovation, is now worth £150,000. You've added substantial value. So it means that once you refinance, normally within a 6-month period, you can pull out the initial deposit, all the working capital, the refurb money, and most likely probably have cash back as well. So when you pull all of your money out of a deal like that, you've got the same working capital, the same money to go and buy property number 2. And then you do it again, property number 3. And what happens is you're now starting to generate an income from those properties. So you've got an income coming in as well. You get capital growth because if you're holding property for long term, they'll increase in value. But the best possible part that happens here is that you're going to have confidence and belief it's just going to go through the roof. It's going to allow you to go out there and accelerate this process because you're bringing in extra income and your working capital, your working, pot of funds will continue to grow. And at one point, sometime in the future, you can go and buy 2 properties at the same time. Now, if you have, more funds available, you can go and build a bigger portfolio a lot quicker, buying 2 properties a time every 6 months. That's 4 properties a year. If you don't have monies and you then go and joint venture with other people, the goal is, again, same idea, is use the same working capital to go in, buy a property, get it back out and go again with that business partner. And then, hey, you'll be able to, continue to build that property portfolio. So this is the key thing about property when it comes to building a buy-to-let portfolio. For those that think buy-to-let property is dead, it is if you're concerned about the tax because you never bought right in the first place. You don't have cash flow. You've got all your money tied up. Now, with the market, we need to take into consideration the economy. So over the last few years, we have seen the market just increase and we've seen property prices increase substantially. However, what a lot of people don't see with the indicators is property prices in the UK peaked in August 2018. Even though there's property inside of 2019, the latter part of the year, that are still selling at market value or over market value, that's not the whole. That is just the odd property here, there and everywhere. The numbers throughout the whole of the UK show that property prices peaked in August 2018. Now, arguably, this current marketplace just now, what we're teaching, what we educate our students is to cherry pick the absolute best deals to add to your portfolio. And what are the best deals? The ones that produce significant cash flow, the ones that you pull all of your money out of the deal. There's no risk at those properties. That is great investments. That's properties you should add to your portfolio. But most people just buy everything and anything with no thought process at all. Don't care about the cash flow. This is a challenge with London being its own economy itself, because in London, you're not buying for cash flow, that's for sure. You're buying for capital growth. And with London, especially with Brexit, London's been affected the most. So where other places outside of London are having growth over the last few years, London has plateaued and if anything has had a little bit of a drop. And right now, towards the end of 2019, there's all these trigger points and signs of a global recession. It's going to be worse than 2008. Make sure you watch one of my other videos where I talk about the impending global recession. But the fact is here is that we need to understand that the best time to build a property portfolio is when property prices are dropping or plateauing. So you can build a portfolio right now, providing you have the right investment criteria, which is pulling all your money out inside a 6-month period and making sure you have cash flow, healthy rental income after paying all expenses, with the right tax advice to make sure that you're keeping more money and paying less tax. And 2, not panicking and getting caught up about having to build a portfolio right now. Because again, the way the market turns, especially into 2020 and with another recession en route, then that will probably be a better time to go a lot more aggressive. However, I would not wait for that to happen, because this is going to be a slow and long recession. And those that get the edge by getting started in a property journey now, will be the ones that get funding through a recession. During the last recession, I was able to get funding and continue to do lots of property deals. Why? Because I'd built up a track record. So now's the time to start buying. If you're just getting started buying 1 or 2, 3 or 4 properties, just getting things started, you might want to add some of those properties to your portfolio if you're buying them right with the right investment criteria, or you might want to trade property, buy property, add value and sell, so buy to flip. And if you're doing that there, you're still building up cash, additional cash flow, so you're increasing that cash pot you've got, so when the recession does come into full effect over the next 12 to 24 months, you can go more aggressive and build a property portfolio with picking up great investment deals as well, great properties during that kind of recession period. So this is just me rounding up a couple of key points here. If you're building a property portfolio, especially in 2019, you're going to have a buy-type portfolio. Make sure you cherry pick the absolute best deals. You make money when you buy. Make sure you're adding value. Make sure you're pulling all your working capital back out so you can go again. Make sure you've got cash flow. And if you've got all of that, you've got the recipe and a formula to have a healthy property portfolio. It's not about the quantity, it's about the quality. So again, thanks for listening. I look forward to speaking to you again soon. Bye for now. Hello, Paul McFadden here. So we're going to roll out a 2-day masterclass. In those 2 days, we're going to be covering everything to do with how to build a successful and profitable property business through buy-to-lets, buy-to-flips and property deal trading. 3 strong strategies that should be the core of your business. It's going to help you create cash flow, build a business, and more importantly, create that long-term wealth. So we're going to be covering all of this in a 2-day event which you can attend virtually, streaming live or in person. So all the information is below. Click there and check it out, and I look forward to seeing you there soon.